why does it still feel so hard to create new supply?
I think we can still lower the regulatory burden in order to make the pace of housing starts increase across Canada.
Where did we see the biggest changes in housing starts last year?
We had a good momentum early in 2025, and as the year went on, we saw that momentum taper off.
What forces shaped Canada's rental market last year?
What we see is a balancing out rental market going from very, very tight to something a little healthier.
What should we be watching for this year in Canada's housing market?
I think the macroeconomic environment will remain challenging and top of mind, with the rental market balancing out, condo market still absorbing the inventories. The question is, what will sustain the markets in 2026 and 2027?
You're listening to In-House, Canada's housing podcast, where we share the latest on Canada's housing market.
Hello and welcome back to In-House. I'm your host, Joelle Hamilton. As 2026 begins, we're taking a step back to reflect on the trends, challenges, and pivotal shifts that defined Canada's housing landscape last year. We're looking at the themes that defined 2025. We'll look at why supply is struggling to keep pace, why it takes so long to build in Canada, and what's changed in the rental market and affordability, among other things. Joining me in the studio today is Mathieu Laberge, CMHC's chief economist. Welcome back, Mathieu, and Happy New Year.
Happy New Year. Good to see you, Joelle.
It's good to see you too. Did you do anything fun over the holidays?
Oh, we hosted both families for back-to-back.
Okay.
Yeah.
Oh, well, you look well rested, even though you're entertaining family. So let's get right into this. I want you to just kind of look back really quickly to 2025. What stands out to you, and why does it still feel so hard to create new supply?
Yeah, I think there's two broad areas why it felt so hard to create supply. The first one is contextual. The second one is structural. So on the contextual side, I don't think anyone will learn about what I'm going to say, but it's been a very uncertain, volatile year with the new administration south of the border coming in early January, the trade tariffs put in, and all that creating not only supply chain challenges in the industry, but as well as overall uncertainty in the economy. And so what happens when an economy is more uncertain? Well, businesses, individuals, households take a step back and try to understand what's coming down the road. And so they slow down decision making. And so that obviously impacted housing markets in 2025. Now, on the more structural side, what we see is that, the industry is struggling with low productivity, high regulation that are actually, slowing down the pace of supply in housing supply in Canada.
Last year, we updated Canada's housing supply gap estimate. Why was this change important, and what exactly did we change?
Yeah, so we changed a couple of things in the model. We first started by acknowledging that the current housing crisis was here for some time, and we needed to actually look at the longer term trend for addressing it. And we also changed the level of affordability, recognizing that COVID played a critical role in deteriorating affordability in most of major markets in Canada, except Toronto and Vancouver, that were already unaffordable before COVID. But the overarching message remains the same. We need to increase supply significantly in Canada in order to meet demand over time. And the overarching message is we need to double housing starts over the next 10 years if we are to meet demographic demand going forward. And that may sound a bit counterintuitive because in 2025, we went through a moderation cycle in the housing industry. But at the same time, when you take a step back and look at the longer term trend, what we're observing is a building up of pent-up demand in the system, which means that younger people stay at home because because of the economic uncertainty, they're not ready to commit to housing right now. Or recent comers to Canada are actually doubling up and, sharing a flat or other co-living arrangement because they don't have the means to actually be on their own. But eventually, those people, those Canadians, will want to create a household of their own, hit the market, and that will raise up demand. And that will be important at that point in time to have the appropriate supply to meet the demand.
So let's move on to another key piece of the housing story last year. How quickly homes are getting built. And an important question throughout 2025 are whether policy changes, zoning reforms, and new incentives are truly speeding up housing delivery on the ground. My question to you is, so are they?
Well, yes, they are, but it's uneven across the country, right? When you look at municipalities where the regulation burden is lower, they build more houses. That's as simple as that. Look at Edmonton, especially Alberta. These are municipalities where the pace of building is higher per capita than in other municipalities that have higher regulatory burdens like Toronto and Vancouver, for example. But there's still some way to go. I think we can still lower the regulatory burden in order to make the pace of housing starts increase across Canada. The other thing that needs to happen as well is to foster innovation and adoption of new technologies in house building. But for that, we need an industry that will be at scale. When you think about it right now, there's only 5 businesses of more than 500 employees in the residential construction industry in Canada. That's not, a lot of scale. The vast majority is less than 5 employees. So what you're seeing on the ground is a lot of mom and pop shops building houses, and it's great. But, if you want to invest in prefabrication and offsite building, you need to have the capacity to invest. And in order to have the capacity to invest, you need scale.
One question pops up into my mind about, the majority of Canadian construction companies have less than 5 employees. How does this compare internationally?
Well, generally speaking, economies are made of small and medium-sized enterprises, at least in Canada. But when you look at the bigger countries, they have more scale. They have more scale in the industry. They have more scale even in the not-for-profit sector, right? This is another area where we would benefit from having larger players.
So where did we see the biggest changes in housing starts last year?
The year started quite strong. Like, we had a good momentum early in 2025. And as the year went on, we saw that momentum taper off, which means that we're starting 2026 with, pretty low momentum actually on housing starts. The main driver of that obviously has been economic uncertainty. It's also been, a relatively strong supply of condos in Toronto and to some extent Vancouver. And so we see those segments to keep slowing down in 2026. Now, interestingly, that means that there was a shift actually in the makeup of housing starts in Canada. So as a lower number of large condo towers were built in the bigger centers, there was a rebalancing towards what was faster to build, the missing middle, if you want, like row houses, semi-detached, small plexes. We see that across the country. It's also very consistent with an uncertain environment. If the environment is uncertain, will you take years to build a big condo tower or a couple months to turn over, a smaller unit that, it comes to fruition a lot faster? But that also means there's been a shift geographically in where we build in Canada, away from the larger centers and towards Alberta, for example, where the missing middle is especially important. In Quebec as well, there's a lot of missing middle, but they're very different. In Alberta, we see more semi-detached row and townhouses. In Quebec, it's small plexes. And so as the year went on, 2025, what we saw was a shift both in the makeup of what we were building and where we were building.
All right, now we're going to shift gears again, and we definitely have to talk about one important part of the housing sector, and one that impacts the millions of people directly, and that's renting, the rental market. What forces shaped Canada's rental market last year?
So that's a great question. What we saw over 2025 was an influx of supply of new rental, which actually, right at the end of the year, we released our rental market report that showed vacancy rates were up The pace of rent growth was slowing down. So rents were still increasing, but at a slower pace than before. And actually turnover rents of unit that change during the year versus those that change in 2024 was actually decreasing. And so what we see is a balancing out rental market going from very, very tight to something a little healthier. Now, it's a bit of a tale of two story. Where on the higher end of rental, the supply was healthy, but it was also very competitive with condo, right? Higher end rental condos, it's very competitive between the two. And so in Toronto and Vancouver, since there's a lot of rental condos on the market right now, the higher end of rental had competition and saw higher vacancy rates, lower rent growth. However, on the affordable end of rental, it's a complete different story. What we see is still a very tight market. So for households in lower income brackets, it remains very challenging to find housing.
So Mathieu, the Bank of Canada held interest rates steady for much of the year before finally cutting them in the fall. What impact did that have on borrowers?
Well, obviously, when the policy rate go down, everyone expects, some more affordability for borrowers. Now, this year has been a bit different because when the policy went up in 2022 and 2023, the spread, so the difference between the mortgage rates and policy rate narrowed compared to history, which means that the full length of the increase wasn't passed on borrowers totally. But now the policy rate has normalized, so has the spread. So the spread increased again. And so the full length of decrease wasn't passed on borrowers. So it was smoothed out, so to speak. And so the affordability and unaffordability effect in 22, 23 and affordability effect in 25 weren't fully felt through the market. Which brings me to again talk about the uncertain environment and the overall financial conditions of households and housing finance in Canada. One area we're really monitoring and is top of mind right now for us is mortgage arrears. When you look at them, they've been increasing quite steadily, especially in Toronto and Vancouver over the last year. They have somewhat stabilized in Vancouver, fortunately, but in Toronto, we do expect still increases in mortgage arrears. And when you look a bit further into the smaller markets that are those that are most impacted by the current tariffs and economic uncertainty, think about southwestern Ontario, resource-rich areas of BC and Quebec, for example, we are observing right now an increase in non-mortgage arrears. And non-mortgage arrears are typically a good early indicator of increases in mortgage arrears. And so, generally speaking, when non-mortgage arrears go up, you may expect mortgage arrears to go up about 12 to 18 months later. That's something we're watching very closely because that could mean some stretched finances for some households across the country.
So a lot of us who locked into mortgages during the pandemic are going to be renewing. I'm one of those people who's renewing next year, in the first quarter of next year. Can you give us an idea, like what are borrowers? What are they kind of leaning towards? Is it fixed rate, variable rate? What are the terms?
The typical product in mortgage finance in Canada usually has been 5-year fix, right? During the increase of the policy rate and, with the uncertainty that's created for household, we saw an increase in variable rate over fixed, but that has come back. So over 2025, because of the policy rate environment going down, households have taking on fixed rates again more predominantly. The difference is it's shorter terms, though. It's not the typical 5-year. What we see is 3 to 5 right now. And so what that tells me is households are actually looking out and waiting to see what will be the situation in the medium term to actually have the opportunity to restructure their mortgages when times come.
So I'm down to my final question. And I always like to kind of look ahead when we wrap up these kind of year in reviews. What should we be watching for this year in Canada's housing market?
Well, I think the macroeconomic environment will remain challenging and top of mind. Think about it. It's 2026 is the year where we're scheduled to review CUSMA with the U.S. It's also a year where the midterms south of the border will happen. And, it's hard to predict how the U.S. administration will react to both events together. And so that may have an impact on Canada. That's something we'll be watching very closely. And at the same time, we have a very slow momentum right now in the Canadian housing markets. And so we're starting off the year in a environment that's, probably even more uncertain than it used to be in 2025. And so we're not seeing right now, a lot of vitality in the market. And to the extent that in some of the most predominant market, I have Toronto in mind specifically, and somewhat Vancouver, with the rental market balancing out, condo markets still absorbing the inventories. The question is, what will sustain the markets in 2026 and 2027? That's something we'll be out there informing the market on a regular basis going forward.
And it's something that we can talk about at the 2026 year in review as well.
Absolutely.
Right? So Mathieu, thank you so much for your time. Thank you for sitting down with us and giving us a really great overview of what defined the housing market last year and a better idea of where the housing market may go this year.
Well, thanks a lot for having me. It's always a pleasure.
And thank you to our viewers for joining us in-house.
Did you know we're not just on YouTube? You can now find us on Spotify, Apple Podcasts, and Amazon Music. Don't miss our next episodes for more real, data-driven discussions.
If you're keeping track of the housing story, CMHC is releasing housing starts data for 2025 next week, and our 2026 housing market outlook a few weeks later. Subscribe to this channel and follow us on your favorite social media platforms so you don't miss them.
Thanks for listening, and see you next time.